On the subject of USDC, Coinbase recently rolled out what is effectively their version of an interest-bearing savings account for the consortium-backed US dollar-pegged stablecoin, with the now public exchange paying about 4% interest per year, actually just 4% interest per year on holdings of USDC kept within the Coinbase exchange itself. They're straddling an interesting line between keeping money in the bank, which is supposedly very low risk but pays effectively nothing, not even taking annual inflation into account, and more exciting DeFi savings plays that typically involve other tokens and can pay up to 12%, but which have smart contract risk and a number of other types of risk. I'm actually quite curious. This is something I've been thinking about. How do you store dollars? What is the best way to store dollars? Is it still the bank account, or is it something like this? And do we trust Coinbase as much as we trust banks at this point? For me, that's a question that I really am still kind of trying to figure out. Naomi, let's go to you first for this one. What do you think about this? Is this a compelling rate, or is the risk still too great?
Well, I think that if people are trusting crypto exchanges as much as banks, it's more of an emotional response rather than a rational one, because crypto deposits aren't insured. So yes, Coinbase seems like a remarkably sturdy institution. It's been around for a really long time. It has a great team. It has a great reputation, and so I personally think it's just as trustworthy as a bank. But we do have to keep in mind that if you're putting in US dollars, yes, they're FDIC insured up to a certain amount. If you're putting in crypto, it's not FDIC insured. FDIC does not go anywhere near crypto. They do not like crypto. They deem it a high-risk industry. And so your crypto is always going to be at risk when you put it in an institution that is custodying those assets for you. That's important for people to keep in mind. That being said, honestly, I think people highly overestimate the amount of faith they should have in banks. So for me, yes, I think that, Coinbase is probably the same as banks. I mean, you have banks that are rehypothecating loans all the time. You have basically IOUs that say redeemable for instantly. That's a big difference from taking out credit, right? When you put in a term deposit, you have a contract that says you can take it out after a certain amount of time. Sure, then you can lend up that amount, and there's no worry because the person isn't going to come claim something before that date. But if you're saying that this IOU is instantly redeemable at a bank and the bank doesn't have the funds to cover it, that's a huge risk, and that's why a lot of people in crypto got into crypto, because they just don't trust the banking system. They think it's kind of a house of cards, and so there are a lot of questions about this system. I think that 4% is a really interesting number because it is quite conservative when you compare it to the craziness of DeFi, where you just have astronomical interest rates. But at the same time, Coinbase has a lot of assets that they could cover losses with. They have, big reserves, and their fiat side, as I said, is FDIC insured. So there are lots of things that they could do to make up for any losses if there are hacks or anything. They also, have a famously good a security system that they transferred, was it 2 years ago? They had this mass migration of funds into this big new cold storage system. So, it does seem like you're getting the interest that sort of matches the market rate according to how much risk you're taking on. And it's a hell of a lot better than you're going to get at a bank account. Personally, I don't know whether you should be keeping much money in fiat as your savings. I don't see it going anywhere but down. So maybe if you're going to choose a crypto, you don't want to choose one that's pegged to something that's only going to go down. But if you are making up for that by getting 4%, maybe if you're risk averse, that might be a good hedge. Or if you're open to a little more risk, maybe you might want to just start putting your money in different cryptocurrencies that you think are going to be the foundation for our decentralized future.
Thanks for that, Naomi. Let's hear from Jen quickly on this one, and then I think we're going to have to move on.
Yeah, Adam, just to your question there, I think that we've been programmed to trust banks, right? Crypto has been around for just over 10 years. We're still learning about it when we look at the general public. So I think when we look at the mass audience, it's going to take a little while to instill that trust in them, but I think that trust is deteriorating quite quickly based on the points that Naomi you've just outlined.